joining us and weighing in on all the SME IPOs and the loopholes there. But let me get on board of Sharan Lillaney, who's the independent SEBI research analyst who's now joining us to give us some more color on that. Hi, Sharan. Good afternoon to you and thank you so much for joining us today.
Good afternoon, Ankita.
Sharan, tell us, Genetic Power and Cables, what's your view on the company? And could you list out some key concerns over there?
So I'll give a quick disclaimer also. I went to the IPO meet yesterday. It was in Mumbai itself. So I'll tell you some big red flags. The revenue has gone 5x in 2 years. Just before the IPO, the revenue has become 5x. And their receivables have gone up 10x in 1 year. So that shows that payments are clearly being delayed. They have a lot of working capital issues. Again, cash flows have been negative throughout the last 3 years. And their major revenue only comes from the top 10 clients. Around 50 to 55% revenue comes from top 10 clients. So very client concentrated risk is also there. Now, what I gathered from the IPO meet is they are getting into forward integration. They are from aluminum rod manufacturing. They are getting into aluminum wires and cables and also into copper wires and cables. So they are raising around 51 odd crores, but again, 40 crores is towards working capital. Only 10 crores is towards factory expansion. And once you compare with your large players like Polycab, KEF, Finolex, they are investing 1,500 crores a year. That's almost 30 crores a day, 30 to 40 crores a day. So this kind of plan looks very far-fetched in nature. And again, when we ask where are their sales coming up from in future, they are saying we will export to Africa, where they have client relations over the years. So it's again very far-fetched. Once you enter the African market, not only you have competition from Indian players, there are competition from the world, especially China, where there is cutthroat competition in terms of margin. So overall plan looks quite a bit far-fetched. So overly it's an avoid rating from my side.
A clear avoid. So, all right. Thank you so much for that. But Sharan, also help us with your take on SEPC as well, because Sharan was just highlighting the fact that yes, there has been some concerns over the right issue. So, any take here?
So, good afternoon, Srishti. In terms of SEPC, I've never seen a company like this. They have done 4 rights issues in the last 2 years. Please just check. Historically, you will never find any company that does 4 rights issues in the last 2 years. Despite doing rights issues and raising capital, they have negative working capital for the last 3 years. Again, the company on books is profitable, but the cash conversion is negative. And secondly, where they are utilizing this fund is again, I cannot understand. And you can't keep on raising money through right issue because it's just a way of raising money. And over the last 2 quarters, the promoter shareholding has come down. Despite having right issue means he himself is not subscribing to the issue. And even if you see mutual funds and DI funds, their shareholding is continuously declining and only retail shareholder is rising. So this is a clear avoid. If anybody holds a company, I would suggest them to first sell the company and after some time review it again. Please do not subscribe to the right issue also, but there are a lot of issues in this company. And again, for the share price, you can see it goes up to 20, 25, again comes to 10. Again, it goes up and again comes to 10. So overly, I'm not very too positive on this company.
All right, Sharan, thank you so much for joining us and giving us your